Good morning. How's everyone doing? Hopefully the sound is good and we're ready to get started here with this masterclass. For those that are joining us for the first time, here we go. My name is Jesus Nava. I'm the Director of Client Training and Education for TradeStation Securities. Thank you for taking the time out of your schedules and be here to talk a little bit about this strategy called the bar range extension strategy. It's a custom strategy, is not supplied with the TradeStation platform. I am going to provide you a few links that give you information not only on how to apply the strategy, but some of the strategy rules and components that make up the strategy, and also the ELD that you'll have to import into your TradeStation platform if you want to have access to this strategy. In fact, let me go ahead and do that right now so that I don't forget. First of all, I am going to share a link to the PDF, which contains the information that I'm going to show on this PowerPoint. And then a second link with a zip folder. The zip folder contains two things. It has a workspace with a chart already opened, and it has a strategy already applied just to simplify things for you a little bit. Sometimes if we provide just a strategy, if you're not really familiar with TradeStation, you don't really know for sure how to apply the strategy to the chart, although we're going to go through that here in class so that there's no questions on how to do that process, okay? So thank you for being here. Let's go through some of the disclosures. Keep in mind that every symbol and idea that I talk about is for educational purposes only. These are not recommendations of TradeStation. Also, that active trading is not suitable for everyone. There's risks associated with trading online. Past historical performance, which is a big component of today's presentation, is no guarantee of future results. We all need to be, aware of that. For additional information on these disclosures, go to www.tradestation.com/important-information. Okay, let's talk about the strategy. Thank you guys for being here. If you are not able to access the PDF or access the zip folder, from the chat, I'm gonna periodically, send those links into the chat as I have time. But if you cannot open the file, for example, sometimes computers don't want to cooperate. There may be things conflicting with the files. If that's the case, just email us at education@tradestation.com and we'll be happy to provide you the files that you need. Let's talk about this strategy called the bar range expansion strategy. Some of the things that this strategy is going to do is identify the days with heightened price activity. In the title of today's presentation, we said that we were going to trade volatility, and we're using the range of candlesticks as a measure of volatility. When the range gets bigger, of course, prices of the security move significantly, and it's a clear indication of volatility or heightened price activity, and we're going to leverage that activity in this strategy. We're going to use the momentum that happens after there is a big range, especially if it's identified, if a direction is identified. So if there's a breakout in range to the upside, sometimes there's momentum. And the following bars, whether it's a daily chart or an intraday chart, will follow that same impetus. Same thing happens on the downside. If there's a breakout on the range to the bottom side, there is going to be momentum, and we're going to take advantage of that with some very short-term trades. So the strategy generates potential trade entries every day, and it adapts to the tendency of price movements to occur faster to the downside as compared to the upside. What does this mean? It means that on every single day, the strategy is aware of what the range has been on the prior days. It calculates an average of how big the bars have been from high to low. And if that average is exceeded by a certain amount, then that's our rule to enter. So, but every day, since we already know what the average range is, Every day, the strategy is ready to place a trade. It's just waiting for that movement in either direction, either to the upside or to the downside, to meet our conditions. One of the things that this strategy does as well is that separates long entries from short entries. Because of this tendency of the markets to move faster to the downside, excuse me, than it does to the upside. It requires much more movement in order for the price to go up. And I usually use a very simple example just to illustrate this. But if you have a stock that is $100 stock, and you have that stock drop in price to 50, this is a very dramatic and significant price drop, drops to 50. The stock loses 50% of its value, from 100 all the way down to 50. However, in order for that same stock that is now at 50 to reach $100, we're talking about a 100% movement. So you already see the difference. It's much easier to drop, requires less strength or less momentum than it does, for the stock to go up, because it's a bigger percentage change. So the strategy accounts for that, and it separates short entries from long entries so that you can select an input that takes that into account. And we're going to take a look at those inputs and how they work. The strategy also utilizes multiple exits, including a traditional stop loss, a trailing stop, a time exit, and a profit target. The idea here is not because these are the perfect exit strategies for this particular, bar range expansion strategy, but it just provides you different examples and ways that you can set up exits for any strategy that you may create. So a little bit more about the strategy calculations. It's going to average the bar ranges of the previous 4 bars. Can that be changed? Of course. In this particular strategy, we're using just the 4 historical bars. If you're in a daily chart, that represents 4 days of trading activity. If you are in an intraday chart, it's just based on the time frame. If you're looking at a 30-minute chart, we're talking about 4 of those 30-minute candlesticks or 30-minute bars. And then it multiplies this average by a specific factor. And this is a factor that is declared as an input, and you have the ability to modify that input. This factor is going to be used to set our entries for long and for short. By default, the factor is greater for shorts, since down moves may take place more quickly than up moves. You're going to see that in the strategy from the get-go. For the long entries, we have a 0.7 factor that gets multiplied to the range, or the range is multiplied by this factor. On the short side, we have, or the default is going to be 1, and we're going to take a look at it. Once we move over to TradeStation, I'll go over the inputs again and describe them so that there's no confusion. Once you have this result, once you multiply the average range times this factor, this amount is added and subtracted from the opening price of the next bar to create potential entries. So when we said at the very beginning that the strategy on every single bar is ready to enter a trade, is because these calculations happen in the background. On every bar, we know what the historical range is, or the average range is for the prior 4 bars. And it knows, to multiply this range by a factor and then add it and subtract it to the opening price. So we have those levels already specified, and what we're waiting for is for the price to break those levels. We're going to take a look at a chart, look at specific price examples so that this makes a lot more sense. So the strategy is going to wait for a significant move on either the long side or the short side by establishing both a buy and a sell short price every trading day. So before we get into the exits, let's go ahead and talk a little bit more about how the strategy calculates this. I'm going to go over here to my TradeStation platform. All right, this is the workspace that I'm sharing with everyone here as well. It's inside that zip folder that I shared in the chat. If you don't have it or entered the room a little bit late, I'm sharing that zip folder one more time. So you can see the strategy is very active. It generates a lot of entries and exits. Before we go into explaining what all these different arrows are, let's go ahead and set the tone for the strategy rules and understand what the strategy is doing. Let me disable the strategy for now. I'm going to go here and go to enable disable strategies, and I'm going to disable it for just a moment. And I want to take a look here at some candlesticks of this is Tesla, by the way, and I'm looking at a daily time frame for Tesla. Let me go ahead and add a study that the strategy uses as the basis of the calculation, which is the average true range. But it doesn't really look at the average true range. It just looks at regular range. So instead of using the average true range, which has a particular calculation when comparing one range to the next, instead of using the average true range, I'm going to use a custom indicator to illustrate the conditions here. So custom one line. Custom one lines are great indicators on the TradeStation platform because they allow you to supply a little formula and you get a very quick result. Let me show you what I mean by that. Let me go ahead and prompt for editing because I want to edit the formula before the indicator goes on the chart. And let's click OK. I'm going to go to the inputs, and here's where I find the formula. So the formula that I want here is just the range. Let me just type in the word range and see if it takes. Range is a reserved word in easy language, and sometimes you can just type in functions or reserved words into a formula, and TradeStation will take it. So now, take a look at this indicator at the bottom. Right now, you see that it shows a 4.83, which is the range of the current bar. Of course, we can sit here and calculate it. Let me see if I pull up a calculator. All right, let me make this a little bit smaller so it doesn't take up the whole screen. Okay, that's my calculator. We are going to calculate the high here, which is 187.20. So 187.20 minus the low here, which is 182.37 minus 182.37. And we get exactly 4.83, which is the value that is right here in this indicator. And I just did this so that you can, try to follow me in the calculation. So this is pretty much calculating the range of every bar. Now, the strategy, we said that it's looking at the prior 4 bars. And we're going to modify this indicator to provide us that value. Let's go ahead and take a look. I'm going to go here into the formula one more time. And I want, let's see, the average. I'm going to type in a function here. So what I wanted to do, no music at this time. So I want to do average of the range for 4 bars. But I want this to start 1 bar ago. It's interesting that you can do this type of shifting in the calculation. So you do the average. I want the range of the 4 bars, but if I don't move the calculation 1 bar back, then it's going to include today's bar. And today's bar is the entry bar. We want to calculate the range of the prior 4 bars. And that's why we added that 1 in square brackets. That's the way that easy language does historical references. So I want to calculate the average as of the prior bar. I'm going to click OK. And there we go. Now we have this value here, 1037, which I'm going to expect is the average true range of the last 4 bars for Tesla, meaning that it's moved $10.37 in average for the past 10 days. What we're looking for is for the current bar to exceed that average by a certain factor. The factor is part of the strategy. Let's go back here to, we did talk about the factor. And I did say that by default, let me open up my chart here and open up some space here. And I'm going to go here to drawing, and I'm going to turn on the drawing tool because I wanted to draw some text here so that we can analyze this. So the long entry factor is 0.7. I'm not sure if that text is big enough, but let me go ahead and edit the text. Let me go to style, the font. I'm just going to make it bold and 14 and set it as a default. That way it's a little bit bigger on your side. So the long entry factor is 0.7 and the short entry factor is 1.0. All right. Those are inputs and you can modify those. We already talked about why one is bigger than the other. And we're going to calculate, this value right now. So 10.37, as you see in the yellow line here, is the average range. So we have to multiply that range by the factor. Well, the short entry factor is 1.0. So this is 10.37. Let's go ahead and put in that text here. So the entry price will be equals to the open plus 10.37. Does that make sense? The opening price of the bar. So we can, get the opening price of the bar right here on this current bar. You can see that is 186.56. So for the long entry though, it's a 0.7. So if I bring up my calculator and I say, clear the results here. 10.37, 37 times 0.7. That gives us 725. 725, so let me go ahead and put a notation for this. Long, okay, for the entry price, for the long entry price, it's going to be equal to the open plus 725. Oh, one thing that I did here that I did wrong, 725. That I did wrong is that on the short entry is not a plus. If you guys remember, we have to go to the downside. So in this case, we are subtracting. So it's minus 1037 from the open. So the opening price is going to be like the anchor, and then you're going to be adding and subtracting from the open to determine what your entry prices are going to be. Now, let me go ahead and set some lines here so that we can see where those levels would be. Let me go here to horizontal line. All right. I'm going to draw a line. Well, first of all, before we do that, we need to find out what the opening price is. Opening price, 186.56. $186.56. That's the opening price of the bar. So adding and subtracting is going to give us our levels. So if we take the 186.56 and we add 7.25, 193.81. All right, let me 193.81. And for the short side, let's bring back the calculator and we're going to do the same. The opening price is 186.56, and we're going to subtract 1037. 176.19. I'm going to do it right here. 176.19. So now we have our two levels, which we can draw as horizontal lines so we can have a better visual of where they are. 176.19. If you have difficulties putting it on the screen, you can go here to the data and enter the price yourself, 176.19. And the style, let me go ahead and change it to a little bit thicker and something brighter. I'm going to use a yellow. I'm going to set that as the default. And I'm going to put the label on the right-hand side. So let me go back into the strategy or the line settings, go to labels, and I'm going to right justify. and make the font bold and a 14. There we go. So now we have the 176.19 here on the right-hand side. I'm going to come here to the horizontal line, and I need another one on 193.81. There we go. This one I was able to drop. Oh, I didn't set that as a default. So let me go ahead and do that one more time. Right justify, bold, 14, set as default. There we go. So now we have the two levels. What this means is that, I mean, you can tell by looking at the candlesticks right here that the prior 4 candles were very big. They were huge in comparison to today's candle. Today's candle, the range is not as big, but it's taking into account the range of the prior 4. Not only that, but then it's taking that range and applying a factor. Of course, the highest factor is here is 1, but it's still a large movement of $10.37. So what we're looking for, Tesla to do here is to break that range or the average range, and we have those two levels. These two levels are already identified by the strategy, and those two entry points are already monitored by the strategy. So if the price moves and penetrates either one of those two levels, then there's going to be an entry. If it's on the top side, it's going to be a long entry. It's just going to assume that there's enough momentum in that direction for to continue to go higher, and that's why there's a long entry up there. And the opposite happens on the bottom side, where if it penetrates that level, then we are going to take advantage of that downward momentum and enter a trade. So we did all these drawings just to get a little bit more clarity on how the strategy is calculating the entries. Let's go and talk a little bit about the exits. For the exits, there's 4 different exit criteria. First of all, it closes the position on the first profitable open, since the strategy only looks for a brief continuation of the identified momentum. So we did say that the strategy just looks for quick momentum. So the trades are going to be very quick. And as soon as it finds an opening price, meaning the following bar, as soon as it finds an opening price that is profitable, then it'll just close the trade. Of course, you can change that. And there is an input inside of the strategy that allows you to give yourself a little bit more room in that profitability, because maybe you want to, yes, you want to follow that exit rule that if it finds the next opening price as being profitable, you may want to add a little bit more to that, saying that, okay, I want it to be profitable, but I want it to be beyond this specific level. We'll take a look at that input and how you can modify it. Then the strategy uses a trailing stop. Trailing stop, looking at the lowest low or the highest highs by a trail bar input. So it's going to look back a number of bars and look at the lowest low or the highest high and set that as a stop that trails as you move along future bars. Stephen is asking, has the 4-day look back been compared to, say, 5 days? What back testing results exist for the strategy? A good thing that you mentioned that, Steve, because the whole purpose of the strategy is for you to optimize it and find parameters that would work for a particular security. What works for futures may not work for stocks and vice versa. When this strategy was first designed, it was designed with futures in mind, although we're looking at the strategy's conditions inside of Tesla. And all these inputs that we're talking about, inputs are a way in which the strategy allows you to modify it, and not only modify it, but also optimize to find those optimal parameters. And we're going to take a look at that as well. So the trail, yeah, also looks back lowest low or highest high, depending on the position that you have open. And as you move along, it'll just set those levels as your exits. The third one, I think there's 4 different strategies here. The strategy closes the trade if the specified stop loss is met. So we do have a fixed stop that plays into the strategy, and if it hits it, then it just closes you. And fourth, the strategy closes the trade if the position is stale after trading sideways for 5 bars. So it's been some time and the strategy hasn't done anything. It hasn't moved up or down, but still, we want to get out because it's stale, that you have the time strategy. Okay, so those are the 4 different exits. And as we apply the strategy to the chart, you're going to see all these different signals firing off. Everyone has a specific label, so you'll know specifically which one was generated. So to recap, long entries, buy on a stop order on the next bar at the open of the next bar plus 0.7 times the 4-bar average of the trading range. In text, it sounds confusing. That's why we went over to the TradeStation platform and we explained what all these elements represent. The range, how many bars, the factor. So I believe that we're all clear on the long entry rule. And on the short entry, it's designed to sell short on a stop order. These are buy stop, sell stop on the next bar at the open of the next bar minus 1 time the 4-bar average of the trading range, exactly what we calculated on the chart. And let's see the exits. We have the strategy closes the trade on the first profitable open. We talked about if it finds an open and there's profits, it'll just take that trade. It exits long positions on a sell stop at the lowest low of the last 7 bars. This is like the trailing functionality that we talked about. It's not a real like trailing stop order where it just moves tick by tick. It just looks at the previous lowest low or highest high and sets those as your stop. And on a short position, there's going to be a buy stop at the highest high of the last 7 bars. You know, the 7 bars is something that may be different on the strategy that you are receiving. I believe I changed the input parameters, the default ones, and I may have shared something that is different. So if you get conflicting information, like for example, here it says the last 7 bars, it's because the inputs have changed, but you can always go back in there and change them to either the 7 bars that the PDF says, or you can change it to anything that you'd like. But let me go ahead and share that PDF with everyone here again, in case you haven't received it. Nick is asking, is this strategy similar as the one in the old stat volume? Yes, exactly. It's very similar, very similar. In fact, I was reading that old stat club article, and the strategies directly, I mean, the rules are exactly that same strategy. So good memory, Nick. Let's see. The strategy also exits long or short trades on a dollar-based stop. Just a regular old-fashioned stop exit. And then it's going to exit a short trade if the holding period exceeds 5 bars. By the way, that applies to long and short. So if it's been you know, a certain amount of time and the strategy hasn't, you know, made money or lost money, then it's just going to get you out. All right, so these are the inputs of the strategy. Let me pull them up all because the inputs are here. Let me go back here to my TradeStation. Let me pull my strategy in a little bit. Let me reset the scale. Okay, let me remove my indicator here. I don't need these lines anymore because that's just, I was just trying to explain what the entry conditions were, but let's go ahead and go to studies, edit strategies, and I'm going to turn the status on that strategy again. Perfect. Let me open this up so we can see a little bit more detail and see what the strategy is doing. But the inputs, let me go ahead and double click on one of these arrows and click on customize or double click on the strategy. So these inputs right here, the L mult, S mult, profit PT, trail bar, and my stop are the inputs that are explained here. L mult, let me go back here. L mult is a multiplier for the long entries. That's why it's called an L multiplier. And then you have a short multiplier, which is the S mult, and it's defaulted to 1. All these inputs, you can come here and change them. profit points, profit PT, is now set to 0, meaning that by default, the strategy, as soon as it finds any amount of profit greater than 0, then it's going to exit our trades. Now we can enter points here. So if you enter a 1, it's going to be 3 points. So if you want to play around with how much profit the strategy is shooting for, then you can add that input. Okay. I just got a message here that my internet was unstable, I'm sorry. So my voice may have cut off a little bit here. So I was talking about the profit points, which is, that wiggle room on your profitability. We said that originally this would exit your position if it finds any amount of profits, but you can set a threshold here for that profitability if you wanted to. The trail bar, this looks back at all the historical bars, and if you're in a long trade, if you're in a long position, it looks at all the lows and looks at the lowest low of the past 7 bars, and it's going to set that as your stop. So if the price drops and it hits that level, it's going to take you out. The same thing happens if you are in a short trade. It's going to look at the highest high of the past 7 bars and set that as your stop, so that if the price hits that level, then it's going to take you out as well. And then you have a fixed stop. This is a regular old-fashioned type of stop. You have a dollar amount. If the position loses that amount, it's just going to exit. So there's clarity in what the inputs represent. You have this PDF so that you can always refer back and see what those inputs are. But let's go ahead and take a look at a few trades here to see how they behaved. Let's look at the most recent trade. Yesterday was the 17th. So on this bar, we already had some trades set up, entry and exit. Notice where the entry is. Now, let me look at the prices here of this bar. This bar went as high as 188.81. We can see the high right there inside the data tips window. But look at the strategy information. Everybody see where the buy is? It bought 100 at 184.40. 184.40 is the level that the strategy was looking for, and it met that level right here where this little triangle is, that tick. It happened, of course, historically. If we had been watching the candlestick building in real time, we would have seen that the strategy went through that level and entered a trade. Historically, it assumes that it actually traded at that level, and then you have your entry right in that middle of that candle. But what happened on the next opening price? See, on the next opening price, we opened up a little bit higher than where we entered, meaning that the trade is profitable. And then we have our long profit, long exit. It actually closed her trade because we made money. We see the same scenario here. It broke on the bottom side and entered a short trade. The next opening price is up here. So notice how in this particular case, this second bar did not close the trade. Notice that it did not close the trade because as soon as it entered, the next opening price was a losing trade. It didn't, and it waited, went down after that. So it kind of went into the profitable side. So it could have, hit our stop, but it didn't. It kept that position open, and it wasn't until the opening of the following bar where we had an opening that was profitable, and it took the trade out again. So this is a short-term strategy. It's just looking for that extra momentum that happens right after there's a break in the range or the average range of the prior bars. Let's go ahead and take a look at some other exits here. Take a look at this one right here. We have the entry on the long side. Next bar, nothing happens. The second bar, what happened? Our stop loss kicked in. You see, the label is very clear. It tells you which one of the exits was the one that was met. In this case, was the stop loss. Let's see if I find any other. I have the stop loss. profit, long profit, short profit. So most of the exits that are generated are going to be, of course, the profitable exit, and then the stop loss. The stop loss exit is one that generates many times too. I was trying to see if there's one that it's either a time exit or the trail exit, because those are two that are also built into the strategy. But most of the time, it's just those two. I guess we can play around with the inputs to see if we can get the other ones to show up. If you want to take a look at a list of trades, I mean, if I go to the data tab and take a look at here, now long profit, you can see, can I sort by signal? No. But it gives me a better view of all the signals that have been generated, and I can quickly scroll down and see if there's something different that stands out. And I don't see any of the other strategy exits kicking in because of the way the nature doesn't allow the other ones to kick in. There's also a lot of movement. You know, there is a strategy exit condition that says if there's no movement, then get out. For Tesla, that's something that is difficult. It's a very volatile stock. It moves, you know, every single day. So having Tesla not move at all and having to exit because of inactivity, it's a situation that doesn't happen very often. The same with a trailing stop. You know, trailing stops, in this particular example, we're looking at historical lowest lows and higher highs, which in itself, you know, these are prices that may be higher and lower than our stop loss. The reason being is because we have these big bars, big ranges happening. So those highest high and lowest low maybe further away and are not hit in our strategy. But you can see that from the initial testing, we can see some profitability of this strategy on this particular Tesla, very specific to this 2-year time frame from 2022 to 2024. Conditions are going to be different if you change securities, if you change time frame. And of course, this is just an example that I found that provided us, you know, some results. Again, and this is something that I say every time we look at a strategy performance report, this is no guarantee of this happening going forward. For those of you that have tested strategies, and I know there are many people here that have tested many strategies in your lifetime, you know that there's much homework to do before, you know, trusting a strategy like this. All right. Any questions? Can this strategy be run with a 1-hour candle? Femi is asking. For sure, yes. The time frame is something that you can modify. I'm looking at Tesla here on a daily time frame. Let's see what happens if I change it to a 60-minute time frame. You see, on a 60-minute time frame, you know, the results don't change that much, but it's now applied to an hourly chart. On this particular back test, I'm looking at, you can see the date range right here from May 6th to June 18th. So we have, you know, a few weeks of trading activity. We have a total of 45 trades, and 71% of the trades were or are profitable in this back test. So yes, any modifications either to the time frame or to any of the inputs, it's something possible here in TradeStation. And that's the whole reason why we have, you know, strategy testing and strategy development here at TradeStation, because we want you to test your strategies. We want you to test the rules and see if it helps you, you know, build that confidence and build that trust on your strategy. Rick says, my strategies routinely show different returns at the end of trading day and the returns recorded on the next day. Rich, I'm not sure what you are comparing, but maybe you're comparing, is it comparing, you know, historical results with real-time results? Because yes, those are definitely going to be different. Whenever you look at a historical back test, the strategy, of course, is making some assumptions. unless you set your strategy to a tick interval where it has access to every single trading transaction and looks at every single price that happened historically, then the strategy, if you don't do that, the strategy is going to have, just access to open, high, low, and close on every historical candle, and it makes some assumptions as where the price went from a particular, opening price. So yes, I do see, changes happening by looking at a strategy one day, then going back the next and seeing some changes. But maybe this is a conversation that's maybe I'm just answering and not really hitting where it should be. So Rich, if there's additional information you want to share with me, feel free to email me. I think we've emailed or corresponded before, so feel free to email me again, Rich. Hey, Jim, how you doing? Good to see you. Any way to access the Old Strategy Concept Club newsletters? Not at this time. I know that there used to be an easy language forum post where an user made these available, but I'm not sure if that post is available any longer. I know that he had posted all those links onto the forum. I'm not sure if you know what I'm talking about, Jim, but they were available or accessible through the forums. I'm not sure if those links were TradeStation links, because if they were, then I'm pretty sure that those have been broken by now. Rich says that he has something he can share. Great. Thank you, Rich. Stephen, any strategies in the archives with the profit factor over 2? I always look at profit factor as a way to look at the maturity and the robustness of a strategy, because profit factor is something you should look at. Now, the combinations of strategies and securities is endless. Strategy, securities, and time frame, and input combinations. I mean, those are factors that can change anytime that you apply a strategy. So having a record of strategies that have a 2-point or higher is difficult to maintain, but it's not difficult to find. It's just a matter of finding the strategy, testing it, and then use some of our optimization engines to take a look at those parameters and find the ones that provide better results. All right. Great. All right. That's my class for today. I want to appreciate the time you guys spent with me. Thank you for joining, Masterclass every Tuesday. Keep an eye on the schedule. We have different topics on strategy trading, easy language development, and also technical analysis. So it'd be great to see you again. We also have options education that I want everybody to explore. If you haven't been to the Options Education Center, please do so. We're developing articles on different option strategies and how to trade equity options and index options and also futures options. So take a look at all the different articles that are there. If you don't know where it is, just go to TradeStation.com, go to Learn, and you'll find options education there. So please explore, and I'm sure you'll enjoy a lot of the content that we're posting there. Thank you for your time. Have a wonderful afternoon, and I'll see you guys next time. Goodbye.